Welcome to the Bay Insider with Amanda and Ying, where we talk about real estate, history, and lifestyle in the San Francisco Bay Area. So here we are in our different setting here on my deck in San Anselmo. And you'll be hearing the birds and the dog and all of these kinds of things. But we just wanted to do something fun, a little bit different, a little different atmosphere. And we're also going to be starting to do something a little bit new, which is kind of market snapshot, kind of
a quick market update, because we realize we have been doing quarterly updates for the last couple of years now since we started, but that's just not giving you timely information.
And also it was, we started really data heavy, right? We had tons of different charts and graphs, and probably your eyes were glazing over.
Yeah, but now it's like, okay, let's just try something different. We just want to give you quick overview of the market without too many numbers. Yeah,
I think that's where we can be really valuable to the people that are listening and tuning in to us. Because we're out there every day, right? We're at the broker tours. We're talking to other agents. We're putting in offers for our clients. We're taking offers for our clients.
Yeah.
So we can kind of see the stuff that doesn't show up on Zillow or Redfin.
It's real time. It's real time data, because by the time you see a transaction close, it's, several weeks down the road. And at that point, it's too late. Data is old. So what we're trying to do is to give you the real time info. So today is February 19th?
I think it's the 20th, isn't it?
Or maybe 20th. Yeah. You're right. February 20th. Okay, so let's talk about it. So we're about 6 weeks into the year now, and the weather hasn't been great. It has been raining a ton. But
for the last week or a week and a half.
Week and a half, right? But our property market, however, is hot. I wouldn't say we've never seen anything like that, because I think in our 10, 11 years career, we have seen it, but haven't seen lately. Let's just say that.
And, we started kind of in earnest, in 2014?
2014.
And I actually, since the beginning, I think I've always said and thought, don't wait until spring, the actual spring market. A lot of people say right after Super Bowl, and that tended to be true, that you would see a lot more inventory. February 8th was Super Bowl, I think.
Yeah.
But this year especially, we've seen huge demand through the holidays, rolling into the new year.
Right.
And lots of buyers out there and very little inventory. Yeah.
Yeah, very little. I mean, it is bad. And it's not just the weather, because in some years weather is bad, so there's no inventory. This year there's just no inventory. And it's not to say wait until March, there's going to be a ton. No, this seems to be real shortage.
Yeah.
And the question is why, right? I think it's one, San Francisco is recovering. We're back. We are become highly desirable again.
Yeah.
Right? Two, people have no place to go.
Yeah, I think I think we are seeing people come back,
Correct.
Austin, Texas. That market was hot with a lot of California people. That's one of the slower markets in the country right now. Definitely people coming back from there. I have seen a lot of Texas and Florida license plates driving around the city.
I have too. Not to say that. Yes, absolutely true. People are coming back.
Yeah.
Or maybe the first time. I don't know. I think we're finally becoming one of the most desirable places to live again, Yeah,
and Daniel Lurie, has been making some changes. The AI business, right? There's so many businesses exploding, tons of commercial property that's been snapped up.
People have cash, a lot of cash transactions, lots of people with money. And yesterday you sent me this article about IPOs.
From the SF Standard, yeah.
Yeah, there will be more cash or, newly minted, millionaire, billionaire, singers.
Yeah, and I guess they're having ways to get money out even before the IPO, which historically hadn't really been something that was happening.
Yeah.
And the epicenter of this is San Francisco, whereas before it was Silicon Valley. So people still wanted to live in San Francisco. They'd commute down to the South Bay, but now it's actually all happening right in San Francisco.
Exactly. So let's just give you some examples of what we saw last few weeks. I think that would be most helpful. So Amanda, do you want to talk about the one on Nice Avenue?
Yes. So 1649th Avenue was an interesting one.
Inner Sunset, by the way.
Inner Sunset in a little kind of 4-block area called
Windsor Terrace. I think that's
Windsor Terrace. Yeah. So nice, you know, detached homes up off the street, kind of stately looking, nice places.
Very nice blocks.
And so this house, I think, sold in 2017. Anyways, they listed it, I believe, at 2.425
roughly. Yeah.
And it ended up closing for just over $4 million.
Yes.
All cash. All cash, very fast close. So, you know, I don't remember how many offers they got. It was quite a few.
I think it was more than 10, if I remember that correctly.
A good amount, yeah.
Yeah, so, definitely more than 10.
I mean, that's an example of somebody just really wanted the house and there's limited inventory. And so they're going to pay what they're going to pay. And there's not much you can do about that in terms of competition. So that's not all the houses. Don't get too discouraged. However, you know, there are other examples. An offer I put in on a place 29 Mendoza in Forest Hill, which was a really special. I think the architect's name's Henry Hill. Mid-century, beautiful house that was listed at 2395, I believe.
Like that,
and that ended up going. I think it's still in contract, so I don't know if I can say out loud what it's going for, but quite a bit.
So let me give you another example.
Yes.
2123 Funston. That turned out to be our firm's listing, Paul's listing. Paul Babagelata, just in case you're curious. Anyway, so the same property was on the market last fall, a couple of times with two different firms. It was somewhere in like 3.8 range, then took a couple price reductions. You know, it was on and off and on several times. Did not sell. Now Paul put it on the market right under 3 million, and it got in contract over 3.5.
Yeah.
So just saying that any good properties will sell.
Yeah, I mean, there was another property that was over on Congo, 739 Congo, I believe. Kind of a difficult space, great neighborhood, great area, but no parking, kind of a little bit of a difficult layout.
Yeah.
But that was on the market for a very long time at a particular price. Didn't sell, just went on recently and went into contract and sold right away.
Yeah. There's just no inventory. I mean, that's a reality. No inventory. Every Wednesday morning, we have a call among our site partners and we talk about the market. And what you hear people saying is like, there's nothing in Richmond, like Richmond district I'm talking about. There's nothing in Noe. There's nothing in West Portal. Like every neighborhood people talk about is almost like shortage of inventories.
Yeah, and so for properties that are desirable, which these days seem to be almost property.
Everything, even the condos are flying off the shelf now.
I mean, really, anything that's central to the city is going very quickly. Yeah. I was doing kind of a review for a client yesterday in a little lower price range and looking more broadly.
Yeah,
and Portola neighborhood, Excelsior, Ingleside. I mean, those are all neighborhoods that are still they don't have the level of competition depending on the price point. I have seen some places that are cute single family homes also get, bidding up large number of offers coming in.
It's a spillover, right? Yeah. Obviously, that's a whole market we're talking about. And we also heard people talking about looking for $8 million, $10 million mansions.
Right.
Everyone's desperately looking for mansions now, and they can't find any. So, so that's our market today. So the question is that going to change in March? Because generally most people bring inventories on in March. What do you think?
I do think we'll see some inventory. I do think there is, with the rates and stuff, there's going to be also, some of those people who had like 5-year arms that are coming due,
reset.
Those, 5, 7, whatever, the people that had lower rates that are going to reset, they may think about making a move now at this point. So some of the inventory may loosen up, but yeah, I mean, evaluation, and we're not the only ones saying this, it's just obvious in the numbers, is anything center of the city is just gone crazy. I mean, I don't know if you saw the two houses that were side by side at 3622 and 3616 21st Street. Noe Valley, really Dolores Heights, like right above where Dolores parked. So one was listed right about $2 million. It was fixer, Edwardian, beautiful house, but needed everything. But that one ended up just closing for $3.3 million.
Right.
And then the one next door was built by Albert Lanier. He was the architect. He's Ruth Asawa's husband.
Oh, you're talking about Kevin's listing.
Yeah.
Okay.
Yeah.
Yes.
And so that one was beautiful. I mean, just absolutely gorgeous, mid-century, modern, incredible views.
Yeah.
So much potential, and not like a fixer, but could use a little updating. And that one ended up selling for $4,220,000, something like that, 228. I can't remember.
Awesome.
But yeah, so frothy. The market is frothy.
and what I tell potential clients or clients are that you better be very motivated to buy in this market. Not saying there are no opportunities, but they're just not nearly as many as you're used to in the last 2, 3, 4 years, so maybe even longer, right?
Yeah, and I think one of the things to note is a lot of times it is hard to wrap your brain around the difference between list price and sales price that we see going on right now. Right. So I totally understand that. At the same time, you have to realize in a market like this, you are going to be overpaying to get the house because you have to be the offer that's higher than anyone else.
Exactly.
That's just the way. But then you make the next comp, right? In a hot market.
Yeah.
And holding on to a property for at least 5 years is what we always recommend, especially when we're talking about a hot market. And pay attention to things that, are going to look more like red flags when the market changes, right? So that you're, square footage that's not legal, or
foundation issues.
Yeah, foundational issues, water. Yeah, on a super busy street. All of these kinds of things that people overlook a little bit more in a hot market tend to kind of rise to the top in terms of concern when the market turns.
Yeah, absolutely. And one thing to keep in mind is if you look at some examples we just told you about, all those homeowners made significant amount of money, really.
Yeah.
Almost all of them, just because they bought the right property and they held on long enough. They made some improvements, and now they are taking the gains.
Yeah, and I was just talking to clients about, what is the market can do over time, and worried about the hot market and everything. I mean, I bought my house in Bernal Heights in 2006, which was a terrible time to buy if you look back and remember what that time was. Yeah. So, we watched the values tumble and crash, but we added value to the house ourselves. And in the end, sold that house in 2020 and did quite well.
Yeah.
So,
long view. Take a long view. Do not look at year over year, but look at 5, 10 years.
Yeah. Don't think you're going to go buy a fixer, flip it in a year as a end user, and then sell it for a profit, because that's not going to happen right now.
There are a lot of people doing that. Too many people doing that.
Yeah. Well, and you just can't compete with a developer's cost to renovate. So that's a dream that's not going to come true.
Yeah. So that's basically it.
Yeah. So we'll get back, next month, give you a little snapshot of what's going on then. But for now, thank you very much for listening.